All right, that's all I got here today, guys. Let's do Frank's charts. We cannot
Yeah.
make the people wait any longer here. Frankie, what you got dialed up for us today? This is one of our most popular segments. So, what chart you want to start with?
It is absolutely one of my favorite times of the week because I mean, most of the time, on Friday through the week, I'm just hanging out by myself, thinking, "Oh, that looks good," and talking through it in my own head. I'm not the greatest company, so it's nice to have other people around. I got to start with Broadcom. We talked about them last week on the earnings roundup. We talked about that weekly breakout. We are at least arguably knocking on the door of that breakout, depending if you care about a wick from a
Wickety wicks.
couple weeks ago. But this is a beauty. Maddie went over their earnings last week. Long consolidation, right? Long consolidation. Semis have been strong. SMH threatening to break out. I mean, you still have tech threatening to break out. I want to be
SMH
involved.
breaking out.
I want to be
I like
involved with that space. And I've always been a big fan, and I'm a little bit of a slower swing trader, right? I'm somewhere between a swing trader and a position trader. I don't know what the middle between those are, but I think that's what I am.
You're a methodical swing trader.
Yeah, I'm slow. I don't move super
You're
quick.
a
I'm a turtle.
thinking man swing trader.
That's a nice way to
Yeah.
put it. That's a nice way to put it. But I mean, how do you not like breaking out of a long-term range? If this was a daily chart, we'd be thinking, oh my goodness, we'd be singing songs. Even better when it's a weekly chart, right?
Yeah,
A lot of upside. I think 550 is a very reasonable target on Broadcom, and quite honestly, I think it can exceed that. But I do
its
think
neutral range is 75 points. I think
Mhm.
it can too.
Yeah, so it's just an easy beauty of a chart. Even if we don't want to trade this breakout, right? We've got a really nice window. We saw something not too terribly long ago, very similar on Thermo Fisher, right? On TMO, where
Yeah.
they broke out of that long range. You don't have to, you can, but you don't have to buy it the day that it happens. We have these big windows, these target zones that we could work after. So we can look for secondary trades or the fourth pullback or the fourth consolidation or whatever it might be. I would definitely keep Broadcom on the watch list, if nothing else.
I got this
go ahead,
as
Manny.
I got this as a multiple time breakout with confirmation above 500. We've tested above 500. You always got to ask yourself as a swing trader, what do you care about that wick? Because if I care about that wick, it does change the analysis. Me, I don't. We have not had a close above 500 yet. It does look like on a no sell day coming into Friday here at 11 right past midday. It does look like we're a no sell day on the breakout. A close above 500 to me would be a violation of resistance and thus technical confirmation. That sets up for me. Aggressive traders certainly could get in on this $500 breakout. But when you're looking at maybe some additional confirmation, secondary confirmation, it does make some sense perhaps above that 507 level as well. You did get that wick up here early, last week, so that wick kind of established that wiki nonsense. And so 500, you see kind of the channel. You are closing above 500. You got to call that technical confirmation, in my opinion, with a continuation trigger above 507. I love Broadcom on multiple time frames. You look at SMH here. SMH breaking out has not confirmed yet on the break. Not SHM, SMH. SMH, you see the breakout here? Look at those semiconductors. It does look like it might be breaking out here. Broadcom breaking out. Look at old Taiwan Semiconductor finally trying to reclaim some semblance of power here as it now is up against the resistance channel, and you're consolidating against that resistance channel as well. So I definitely like Broadcom here from a directional perspective. I got confirmation above 500 and continuation trigger above 507. In terms of targeting, haven't really done any detailed targeting on it yet, but trust Frank's targeting 100%. 550, 575 makes some sense to me.
Yep, that's where I'm at. 550 by 575, and a good window to work with, right? Even if your numbers aren't
even
exactly
if you wait till above 510, you're perfectly fine.
Yeah.
There's a lot to like, and if it's not Broadcom, I think they make a compelling technical case, but Taiwan Semiconductor, right? I mean, there's so many nice ones out there.
Can I give you a shout out? Is it okay?
Of course.
Is it
I'll always
okay?
accept a shout out.
Frank is doing little mini versions called Tackle Shorts over there on Tackle Trading's Twitter account, and he put out his first tackle short, nice little 2-minute video on ON Semiconductor just yesterday. So if you do follow the Tackle Trading Twitter account, obviously you know Coach Frank lives over there, posts a lot of charts that he's looking at. Did a video on it yesterday, so definitely check out Tackle Trading's Twitter account. Handles Tackle Trading. Make sure to give it a nice little subscribe. And when you like Frank's stuff over there, you know what he likes. He'll never beg for it. I'll beg for him because I know he loves it so much. He loves likes, retweets, comments. He loves anybody that participates over there, and will always answer questions over there as well. So if you want to get more action on Frank's charts, definitely check out Tackle Trading's Twitter account, because he had ON on before the breakout, and then it broke out.
Yeah, hey, so far so good, right?
Fantastic.
Maybe I should retire while I'm ahead, right?
Well, you're one for one. You're 1 for 1, buddy.
By the way, I just linked
100%.
I linked that first video on ON Semiconductor in the chat. If you're not following Tackle Trading on Twitter, go give Coach Frank a like.
Well, and that is the only place you will find those tackle shorts for Frank's charts is on Twitter. We guys, get excited for tackle shorts. We have more tackle shorts coming down the road as well. We're going to have Jedi options. We're going to have Matt's whiteboard. We got a lot coming down the pike, but we did kick it off this week with Frank's charts, and what a kickoff with ON. Great job, bro.
Kick it off. Appreciate it. Yeah, come join us. It's a fun way to be able to, just another way to interact with the community, right?
Absolutely.
And so there's always room for one more of you over at the Tackle Trading Twitter. You can also find me at Frank Martin 23. Between the two, I'm a pretty easy dude to find.
Yeah, absolutely. Any other charts there, Frankie?
Of course, we got to look at least a couple other charts, don't we? I got to look at IRM. This is a REIT. Now they're going ex-dividend, I think, on the 14th. Yeah. So like on Tuesday, we had this big breakout of this cup and handle pattern, right? Nice little, very easy to see breakout a couple of weeks ago. Nice drift back into that old resistance level. I don't think we've got the confirmation yet. It would be really nice if it happened Monday, so we could at least, get in before the dividend date, which is payable in October. I want to say, don't quote me on that, but I think that's what I saw. Nothing real crazy here, just a good old-fashioned pullback to the breakout channel. Pretty mellow, pretty slow, right? That's kind of been in line in large part, at least, with the sector as a whole this week. Risk to reward is going to be pretty solid, in my opinion, at least. I can target it to the same way that I would have targeted if I bought the breakout, which would have been, using the cup, right? So going from, around 47 at the high point and around 42 at the low point. So risk to reward shouldn't be a problem on the pullback. Pretty easy trade, in my opinion, with maybe a 50 by 52-ish type of a target. It's kind of where my head would be.
I see it, Frankie. Don't know if I love it, but I definitely see it. And let's look at it very quickly. I got this very consistent here. You got a nice little 4 yield here, 4 yield there as well. So I do got a very consistent technical pattern. Let's start with the zone very quickly. You got to love the zone you're in here. Number one, you see the line I drew. That's multiple different pivot points from the previous resistance levels. You see it kind of kissing into the top end of the zone. The bottom end of that horizontal resistance level is right there at the 20-day moving average. I think this is a pretty textbook bullish retracement, quite frankly. Pay yield, you're probably targeting upwards with the pivot point, probably first target 50, second target 51, 51 and a half. But again, REITs, we're not looking too aggressive here. It just needs a doji, needs a pivot confirmation, really. I definitely see it. The only cold water I'd throw on it is you can see it's a REIT, right? And it can consolidate during the retracement phase for more than just your standard.
For sure.
Okay, right.
Well, that's what I'd like to get in before the dividend. So if we do get into that, at least I've got that going for me, right? Because it's a swing trade, somewhat on a REIT. Hey, hopefully it just takes off, right? It's easy run to 52, but your expectations are it'll be slow. Well, although in all fairness, I've passed on a few good setups on IRM because they were a REIT, and I sure don't feel very smart.
And you kind of regret it.
Yeah, I don't feel particularly smart about it.
Well, and again, real estate, real estate's in an interesting little situation right now. You got a couple things. Number one, you don't love the volatility both up and down here. This is real estate. This is what it needs to do. This is how tech performs type scenarios. And so you don't love it, but what you do like is you like the zone where this pullback is coming into in the REITs. You see the old resistance. That's right where the low point was today. And you also like the fact that the REITs have been recovering off that nasty cash open. You see that nasty cash open here today. That didn't last much more than the cash open, guys. Found support right there at 47, tried to stabilize. So you got to like the zone you're in. You got to like the wick that you're starting to build here. And if you do get a little stabilization above 47 in the actual sector itself, yeah, that REIT can pivot and do good things.
For sure. Yeah. I mean, my only, our fault with them was they were a REIT, but I think that's a mental, it's somewhere between their sense, there's logic to it, but maybe maybe we as traders go a little too far. Well, it's a REIT, right? It can't swing trade a REIT. Well, sometimes you can,
Listen, sometimes you can swing trade utilities, just not like
sometimes you can. Now. All right, now, Matt, I'm going to make you make a choice here. I'm going to give you two stocks, very similar places. We're going to look at Phillip Morris and Altria Group.
You might as well ask Mark that question.
MO.
Phillip Morris, technically, I got this as a little bull flat, quick bullish retracement. You got to love the the 20-day moving average bounce. That coupled the 20-day moving average bounce with a little bit of horizontal resistance of 102.5. I got to like that zone. This three candle here, this is a fascinating three candle formation here. This is where you start understanding what creates pivots. You have what we call the preceding candle, which is the candle that drives the stock down into support. Then you have what is the bounce candle. The bounce candle is the confirmation where you're holding support. And you got to like that level you're at when you're sitting at support and you're looking at that bounce, right? And I haven't talked about Marty the Elephant. I need to do a Marty the Elephant webinar. I got to bring him back a little bit. Marty hit the trap slowed down, and then exploded back up. That confirms. And so this candle would be technical confirmation. That confirms the bullish retracement. It confirms traders to give traders the go ahead to execute their trading plan.
Yeah, nothing to add on that one. So MO, same type of company, but much different chart, right?
Very similar company, but you're looking more as a high base scenario where you're upwards to the top end of the channel. You have yet to confirm a breakout here, and you're coupling this breakout here, Frankie, with a little bit of chop over here in April and May of this year. Couldn't fight up against at that time. A breakout here does lead you to kind of reclaim that 52.5 level. So a breakout here, you're probably only targeting the previous level of resistance. Whereas on PM, I'm looking at a targeting here. I would target up here in about the 110 level in terms. So I like the return and I like the probability a little bit more on Phillip Morris. But I could see people preferring the high base on Altria. Personally, I like the trend continuation on Phillip Morris.
And what about you, Tim? I mean, this is an interesting debate, I think, because if you're interested in one of the you're probably not interested in both, right?
You should not be interested in both.
From a trading point of view, you're going to have to pick your poison, and maybe you don't like either, which is fine. Yeah. But where would your head be, Tim?
Yeah, one thing I like about the Altria chart is that you can map out a very, very quick trip to your T1 if you're just looking for like a 2, 3, 4 day swing trade type setup type situation. But I'm actually on Phillip Morris's side. I like the trend nature, the character of the trend better. It's just above more moving averages. I like the pivot point relationship, and whether I want to take it as a breakout or on the flag, I could probably start to build that plan around that. I like PM's trend better, so I would choose PM.
Fair enough. What
would you choose?
I think I would go with Altria Group personally, for the reason that Tim said. I think just, for me, I wouldn't be expecting a whole lot out of either of them, right? They're staple stocks. I would probably like in my head, it's like, okay, we break through this top here on MO. we work back up to those highs at that resistance level at 5250 approximately, and then
Yep.
I just leave and I don't have to think about it anymore. So I think it's the management, not really the pattern or the risk
Yeah.
reward necessarily. I think I just see this one for me and kind of my read of the situation being a little easier. I also like that I kind of have that rising 9 giving me that springboard up, perhaps.
Yeah, I just drilled
to
it 2
push me
days ago.
through. So, I think it's an interesting conversation technically, because if you take the names, maybe you hate the names, maybe like, Frank, what are you talking about wanting to
Mhm.
swing trade these type of stocks? You're going to be presented with these type of decisions sometimes, right? Where you are picking one versus one versus another. So I think it's always a fun one to have. Now this one's weird, Matt. We'll look at a couple more. This was BJ's Wholesale, BJ.
BJ's Wholesale, little hammer candle,
So yeah.
reclaiming.
So
Oh,
yesterday
tied
I was
against resistance. Okay.
so yeah, yesterday I was looking at them and basically, thinking flag off of the 9. That's where
Yeah.
my head was. Little flag off the 9. I like that shallow retracement type of a pattern. I think it's a great place to be able to get good momentum for cheap risk. Whether I'm right or not, that's what I feel. So, of course, today with the gap down, it kind of throws some cold water on it. And so immediately I'm like,
Nope.
yeah, whatever, who cares, right? It is what it is. But now we fired back with this big hammer. We are going to, barring something real weird, close above that 9 EMA. And as Coach Mark
I
says,
see it, Frankie.
close is a close, right?
The close is a close.
Close is a close. I like this a lot from an entry point of view. I think my hang up on it is the stop was so easy yesterday, right? Getting my stop right below the 9 EMA, that also lined up
I
with
still
intraday
think
support.
I still think the stop is easy. And it's because of one simple thing. This is all market related cash open stuff.
Mhm.
Yep.
The entire wick is. The entire wick is just the cash open got caught up, it recovered. When you're looking at the consistency of this flag here, and let's assume that doesn't exist.
Okay.
So I'm just saying, let's take the nonsense of the cash open out.
Sure.
That's all
Yeah,
I'm
because
saying.
they made it ugly.
And you look at that as the support level, right? The intraday support level here.
Mm-hmm. That's how my trade would have been built
Intraday
yesterday,
over here.
right?
I think you still trade the plan. I think you discount the cash open here because I do think you're now looking at the intraday confirmation. You have now broken back up above this trend line. You still have your horizontal support level intraday that you could trigger that stop loss under from a flag perspective. Now, if you do take this candle into account, you can't make the trade because I don't think you can make reward to risk ratio work.
I don't think so either.
Right. But I do think if you put a stop loss underneath 57.75, I still think you're applying. I still think you would be accurate in the step system on a flag. Let me put it like that.
Yeah, and that's kind of where my head was, but it was such an easier thing to prep in my head yesterday, right? This was one I was hoping we wouldn't do anything today.
I think you used yesterday's low, and that kind of coincides with 57.75. Put a stop loss.
Tim,
Yeah.
agree with that?
Yeah, I do. And obviously, I mean, I went and looked at discount stores while you guys were talking. Costco's look great, but it's got earnings coming up here. It'd be the only other comparable one in the sector with the trend. It's got a wonderful trend. It's really riding the lightning in it. And when you go to the intraday chart, Matt, that really helped me understand that wick. So I think I can map out a trade too. So yeah, I agree.
So yeah. Nice. Well, you've sold me on it, and that was your job. Usually, my job is to sell you.
I sold you.
You were to sell me. I will do one more before we got to get out of here. And this one's it's been impressive, man. And you got to keep it on our watch list. And that's just Allegiant Technologies.
Yes, break above 180 makes a lot of sense. Got good momentum and trend. The 9 EMA is finally caught up to it, following a really good earnings report and then continuation response to it. This looks like a 180 trigger, and you drive this puppy into 200.
Yeah, tighten in on those
You treat the 180 trigger into like this is 90 to 100.
See, and I love
Yeah.
trades like this so much more than even the BJ one. And the BJ one was nice, you know, and I mapped out, we understood the wick and all that kind of stuff. For me personally, the clarity of the trigger up here and the compression of those 5 candles. You guys said this a few weeks ago. I love these segments when you guys are going back and forth, by the way. When you're talking about high bases, you either like it for like a week or like lots longer. And this is one of those.
There's
like
there's a weird middle ground where I hate it though.
Yep.
There is,
Yep.
there is.
You guys were talking about that. Yeah.
I know it when I see it. I couldn't tell you what it is though.
Yeah.
Well,
and
because when the high base doesn't work out and it's 3 to 4 weeks into it, all of a sudden you've had violations of support, which means you're in some degree of net neutrality, which means you need to wait for the consolidation to work out. So it actually changes the pattern. But yeah, I get your point.
Yeah, it's looking good. I like the trigger up there.
Yeah,
very
I like it too.
So, yeah, nice, easy, clean entry. Stop should be a real easy trade to prep. And what I like about it is they've, you know, relatively speaking, held up real nice in a bit of selling. And you know, when you dig a little deeper into healthcare, you do realize at least some of the selling and some of the weakness is isolated to some degree, at least over in the plans.
Mm-hmm.
Those plans are garbage right now.
Some good candidates on the bull side there, Frankie. Man, that's very good.